All right, let's cut through all the get-rich-quick noise for a minute. We're going to talk about a very, very exclusive group, the 5% Club. In this explainer, we're going to break down the exact mechanical and psychological rules they use to not just survive, but actually thrive in the wild world of trading.
It really all starts with this one single number, 95%. That is the staggering percentage of retail trading accounts that lose money and eventually just fail. It's a brutal statistic, and it's not because 95% of people are bad at math. It's because they're stepping into a professional's game playing by amateur rules.
And this quote right here, man, it just hits the nail on the head. See, the market isn't a game. It's not a hobby. It is a high-stakes business environment. And if you don't show up with a professional plan, well, you become the funding for the people who do. And get this, the trading world is a truly bizarre place. I mean, believe it or not, a single trader, literally in their pajamas, once caused $1 trillion market crash from their bedroom. A major bank accidentally wired away $900 million. This is the chaotic, professional, and honestly fragile arena that most people just step into, completely unaware.
So, what's really going on? Well, it's this fundamental conflict. Our brains, they're hardwired for survival in the jungle, not for modern markets. When you see a price dropping fast, that ancient fight or flight response kicks in. Your brain screams danger, and you panic sell, which is the exact moment the big institutions are using all that retail panic as fuel to buy. The professional, on the other hand, they operate like a casino, calmly, methodically, just executing a plan that's based on pure probability.
And it's that jungle brain that feeds the biggest illusion in all of trading. This obsession that most people have with simply winning trades instead of, actually making money.
Let me ask you this. Think about it. If you won 7 out of every 10 trades you took, you'd probably think you were doing great, right? It feels like you're succeeding. But are you? Really?
This table just brilliantly illustrates the truth. Look at the amateur, a 70% win rate. Amazing. But because their few losses are absolutely massive, they actually end up losing $500. Now look at the pro. They're only winning 40% of the time, less than half. But because they cut their losses small and let their winners run, their net outcome is a positive $1,400. That right there, that is the survival math.
And this brings us to what might be the single most important concept for any serious trader, expectation. It's not about your win rate. It's about the mathematical edge of your entire system over a long, long series of trades. It's the exact reason the casino always wins, and it's how a professional trader stays in business for the long haul. So, the big question is, how do you build a system that actually has a positive expectancy? Well, the solution is a framework that pretty much all professionals use. It's called the 3M survival system. It's built on 3 pillars that are completely interlocked. They all have to work together. You've got money management, methodology, and mindset. And you absolutely cannot succeed with just 1 or 2 of them. You need all 3 working in harmony. First up is money, and you need to think of this as your shield. This is the non-negotiable part. Risking just 1 to 2% of your capital on any single trade is what ensures that an inevitable losing streak, and they will happen, doesn't completely wipe you out. It's literally what keeps you in the game long enough for your edge to play out. Next is methodology. This is your map. It means you have a crystal clear if-then checklist for every single trade you even think about taking. No more trading based on gut feelings or what you saw on social media. If your specific conditions for entry aren't met, you do nothing. Period. No exceptions. This is what takes emotion out of the equation and forces discipline. And finally, we have mindset, which acts as your internal referee. This is the raw discipline you need to actually enforce the other 2 M's. A perfect example is a break protocol. Let's say you lose 2 trades in a row. Boom, you shut everything down and you walk away. This one simple rule prevents that disastrous revenge trading and lets your rational brain take back control from your panicked jungle brain. Now, it's super important to understand that achieving all this is an evolutionary process. You don't just wake up one day and decide to be a professional trader. It's a journey with stages. And this timeline pretty much shows how it goes for almost everyone. You start at stage 1 hunting for some magical holy grail indicator that will make you rich. Then reality hits hard, so you move on to actually building a system, applying it consistently, and then eventually you reach a state where trading becomes this calm, almost reflexive process. It can even feel, well, a little boring. And that's exactly when you know you're doing it right. So if you're ready to stop being the market's donation, if you want to start acting like a professional, there's one single step you need to take right now. You need to ask yourself this one simple question. Forget your feelings, forget how many times you were right. What does the cold, hard data say about the results of your trading decisions?
So, here is your mission. Don't wait. I want you to go back through your last 30 trades, your wins and your losses, and calculate your actual expectancy. Find out, for real, if you have a mathematical edge. I absolutely guarantee you, once you see the real math of your own decisions, you will never, ever look at a chart the same way again.